Financial Armageddon in 90 days. Hey everybody, you're watching Bull, Boom, Bear, Bust, back with another dose of economic reality. We've got calls for major problems with automobile loans, and 90 days is the time it takes for the repossession to begin, or the attempts to repossess a vehicle to begin. Now, some finance companies are different, but the key is 90 days. We're going to talk about that here a little bit later in this video. But yes, late loans and loan delinquencies are jumping really fast, and people have severely overpaid for vehicles, and we see these all-time high price levels with cars and trucks, and it doesn't end well, folks. First, let's just take a look at some other information here. We have U.S. producer prices up 11% in June amid high energy costs. And what that's going to do, that's going to keep inflation elevated for goods and products. When producers pay higher prices, they pass it along to the consumer. We're seeing everything from raw materials to transport, of course, energy, still at very nosebleed levels. And that's going to keep prices high. So next month, expect another high CPI number, and I wouldn't be surprised if it was higher than what we saw in June. Of course, it's going to be in August when we'll see. In early August, we're going to see what's happened here in July, but based on what you and I have seen, I think most of us would agree that things are not getting much cheaper. And sure, we saw gas prices come down a few cents, but if you look back over the last couple years, we're still at nosebleed levels for energy prices. Now let's get into the automobile loan situation. Repossessions on cars are exploding. Now this headline says that that's bad news for everyone. This is out of Car Scoops. Well, we have to dissect that a little bit. Is it bad news for everyone? Well, for the people that are getting their cars repossessed, yes, I feel really bad for these people, and it's bad news for them. But for people that didn't buy and that are waiting for more inventory to come back on the markets, so hopefully prices will come down, it's not bad news for those people. Now, this argument here that it's bad news for everybody, we kind of have to disagree with that. So just because I show you an article, a mainstream article, doesn't mean that I agree with it. I agree that repossessions are exploding, but it's not bad news for everybody. If you're looking for a lower priced vehicle, then you want to see more inventory come back on the market. And what happens when millions of people get their car repossessed? You're going to see a glut of vehicles. So that could happen, absolutely. I'm not saying it's definitely going to happen. They could pass a law, just like we did with foreclosures. We said there was no foreclosures for almost 2 years. And they could do something like that with automobiles. They could say nobody can get their car repossessed. Now, that hasn't happened so far, and I haven't heard anyone talking about that, so I don't think it's going to happen, but we just have to leave it out there because you never know. Look at some of the things that have already happened. Look at the loan forgiveness for certain student loan debt. People with debt, student loans got their debt eliminated. Look at the rental moratoriums for the past few years in many cities. Look at the foreclosure prevention programs. A more recent thing is certain medical debt is being discharged from people's credit report, keeping people's credit scores elevated. And we'll talk more about that here in a little bit. But look at all the intervention, all the programs, all the rescue packages that are put out there. So without some massive rescue program for people's auto loans, we do expect a massive amount of inventory of vehicles to come back on the markets because things are starting to hit the fan with these auto loans. And if we look at the average price of a new vehicle now, it's over $47,000. That set a new record in June. So people that went out and bought these vehicles in the past couple years, you have to ask, did a lot of them have to do it? Well, maybe not a new vehicle, but a lot of people did buy a new vehicle. People like a new vehicle. It's exciting. It's going to last a little bit longer. Of course, you're paying a much higher price. There is an element of excitement into buying a new vehicle. Just the smell, the feel of a new vehicle. There's not many things like that. But how many people went out and bought the most expensive vehicle that they could get qualified for because interest rates were low at the time? Also, you look at the pandemic era stimulus checks, and that made a lot of people feel wealthier than they really were. It gave people a down payment for a vehicle when normally they wouldn't have got approved for a loan because they didn't have a down payment without those stimmies. So yeah, maybe people overpaid or paid more than they should have. Even if they wouldn't have bought a new vehicle though, the price of even used vehicles is very, very dangerous. All-time high levels also for used vehicles. And many people went out and bought a car probably more expensive. They could have got a cheaper car, but they wanted to either look cool or maybe have bragging rights with the type of vehicle they bought. Maybe not everyone did. Maybe some people bought the lowest priced vehicle that they could find that met their needs, and it's likely some of those people are going to get repossessed as well. So I don't think it really should be I told you so or a laughing matter that anyone's getting their vehicle repossessed. That can make the difference between them being able to get to their job or not. And once you lose your transportation, you may lose your job, and then things could really snowball in a bad direction with this. So that's why I think that article that we looked at was saying that this is bad for everybody because it could have very negative consequences towards the overall economy. But again, if you're just looking at prices and want prices to come down, this may be something that will bring the prices of vehicles down. We'll have to see. If you are waiting for lower prices, you may want to cross your fingers that they don't implement some sort of massive freeze in vehicle repossessions. And remember, with these vehicle loans, there was a lot of subprime loans and a lot of extended loan terms, 6, 7 years, even 8 years I read about. And you combine that with all the stimulus checks that allowed people to afford a vehicle or at least put a down payment down, it's a dangerous situation as far as these car loans. Now let's go ahead and take a look here. This is a chart out of wolfstreet.com, and we see that inventory really hasn't gone up very much so far this year. And if you look back 3 years ago, we're still at about 1/3 of the inventory levels that we saw pre-pandemic. This chart goes back to about January 2019, so it goes back about 3.5 years. And as you can see here, we're still far below where we were pre-pandemic. So we've got a long ways to go for this inventory to level out to a more balanced market. Right? But we are seeing, even so far this year in 2022, we are seeing a very slow rise in inventory. So we could start seeing some pressure coming off of the prices. And in fact, if you look at the vehicle prices in June, prices did come down slightly from the month prior. And if we look at wholesale vehicle prices for used vehicles, prices went down in June, but not by very much. This was a 1.3% drop from the month prior. Not a very big drop, especially when you look at the 30, 40, 50% increases that we've seen over the past couple years. 1.3% is barely scratching the surface, but that is just in 1 month. So if this remains at this level, we annualize that, then you're looking at over 13% dip per year. That could make a dent and bring prices down somewhat if this continues. Or maybe it'll get worse. Maybe we'll see prices come down 2% next month, maybe 3%. We'll definitely have to keep an eye on it for you. Car repossessions are on the rise as average price hits $47,000. We just talked about the $47,000 number there for new cars. And this is out of Autoblog. Borrowers of all stripes are defaulting, with some monthly payments over $1,000. So about 12% of all loans out there right now are car payments, loan payments that are over $1,000 a month. So 12% of auto loan borrowers are paying over $1,000 a month. That is a home payment in some parts of the country. It's rent. And this is for a vehicle. A vehicle that's normally a depreciating asset. Of course, the last couple years it's turned into a appreciating asset. But in normal times, vehicles, when you bought them and drove them off the lot, they were depreciating in value. Now, right now, subprime loans for vehicles These repossessions for these vehicles under these subprime loans are up about 11% year over year. Now, that doesn't seem like a lot, but we're just getting started. So in 90 days, this is going to look much, much worse than it is today. And in fact, for millions of people, it could be financial Armageddon, because once you lose your vehicle, you lose your way to get to work and back if you have a job, if you're lucky enough to work. And then the snowball really begins. And I've been saying here for over a year that the second half of 2022 is going to be the time that everything's really going to hit the fan. And so far, we're only about a half a month into the second half. The beginning of July was the start of the second half of the year, so we have a long ways to go, obviously. But things are unfolding just like we talked about. We're going to start seeing these types of numbers increase with repossessions, and maybe we'll see some bigger drops in cars. The amount of loans that are late is likely going to increase, again, unless some major rescue package or program gets implemented. But we're going to have to keep an eye on it. Please let me know what you think down in comments. Are we going to see further decline in values, or are they going to come in with some massive program where they're going to stop vehicles from getting repossessed? Please let me know. But without some sort of program that comes out of nowhere, we're going to see some drops in prices, and much bigger than the ones we've seen so far. And we're going to keep an eye on it for you. Thanks everybody for being here. Please subscribe, like this video if you like what we talk about. Come back for more updates. Be well, stay safe, and keep stacking. Bye for now. Peace.